Hello and welcome to PSM Speak. In my previous video on the safest deposits or safest banks in this country, I promised to you to make a video on the safety of your deposits to the extent of 5 lakh rupees in any bank in India almost. And this is the video about it. When I say that your deposit up to 5 lakh rupees is safe, then questions arise. Is it only up to 5 lakh rupees? Are there not ways to protect our deposits in the banks beyond 5 lakh rupees? And which type of deposit is safe? Is it savings bank? In other words, what kind of deposits are safe? Savings bank deposits, recurring deposits, fixed deposits, current account deposits, and also when do we get back the money when the bank is in liquidation? Do we need to make a claim? Who is protecting this? Is it the banks themselves? It can't be the banks. Because it is on account of the failure of the banks, we are guaranteed at least 5 lakh rupees in our account. Then who is guaranteeing this? Is it the Reserve Bank of India, Government of India? Yes, surely it is the third party that it guarantees. Then do we need to pay any premium on that if it is an insurance arrangement? So these are the natural questions that arise, and this video seeks to find answers to all these and many more questions. First, yes, your guess is right that it is not the banks themselves that protect our deposits when they fail. It is an outside agency, that is Deposits Insurance and Credit Guarantee Corporation, a wholly owned subsidiary of Reserve Bank of India. So indirectly it is the Reserve Bank of India that protects the deposits up to 5 lakh rupees in any bank. Which kind of bank and what? Before all that, first let us try to understand the origin, genesis and the evolution of the Deposit Insurance and Credit Guarantee Corporation. After independence, barely after 1 year, some banks failed in Bengal. Government worried how to protect the interest of the depositors in such failures in future. Serious thoughts came into the mind of the people that there should be some arrangement like deposit insurance, but no immediate action was taken around that time, 1948. Again in 1950, the Rural Banking Inquiry Committee recommended, rather it supported the concept of deposit insurance. Then again the idea came to the fore what to do, and no action was taken yet. But in 1960, when two banks, Palai Central Bank and Lakshmi Bank, collapsed, then the government and the Reserve Bank of India felt that there was an urgent need to do something. A bill was introduced in the Parliament on Deposit Insurance Corporation Bill. That was in 1961, exact date 21 August. After the assent of the President came into force from January 1962, the Deposit Insurance Corporation. Initially, the Deposit Insurance Corporation covered the deposits of only the commercial banks until 1968. In 1968, they have included the cooperative banks. Simultaneously, the Reserve Bank of India was operating a scheme called Credit Guarantee Scheme to take care of the credit, to encourage the banks to give loans to people, small loans in particular. On January 14, 1971, Reserve Bank of India established a public limited company for the credit guarantee named Credit Guarantee Corporation of India to further strengthen the deployment of credit to the poor. Subsequently, the government and the Reserve Bank of India found it expedient to merge both this deposit insurance and credit guarantee into one institution, Deposit Insurance Corporation and Credit Guarantee Corporation of India. Both were merged, and the result is Deposits Insurance and Credit Guarantee Corporation. And the Deposit Insurance Corporation Act 1961 was also renamed as Deposits Insurance and Credit Guarantee Corporation 1961. The later 1981. To further strengthen the credit, the guarantee support was extended to the small scale industries also. It did not stop there. In 1989, entire priority sector was brought under the Deposit Insurance and Credit Guarantee Corporation's purview. But this enthusiasm of bringing more areas of credit did not last long. The reversal trend we have seen in 1995 when the housing loans were excluded from DICGC, Deposits in Insurance and Credit Guarantee Corporation. And later, by 2003, the Deposit Insurance and Credit Guarantee Corporation limited its activity only to cover the deposits, no credit. The reason was all the participating banks withdrew from DICGC. Because we are focusing here on insurance, I am not going into the credit related thing. They have withdrawn, and then although the name remains the same, Deposits Insurance and Credit Guarantee Corporation, DICGC, it takes care of only the deposits now. A question may arise in your mind, and rightly so. If banks withdrew to participate towards credit, can't they do for deposits the same thing? No, it's not possible. If they withdraw from DICGC, their licenses will get cancelled and they cannot do anymore the banking activities. Then how many banks exactly are covered? We can find the list of the banks, the name of each bank covered by the DICGC on its website. It gives the list of 10 types of banks, 2025 banks in all, 12 public sector banks, 21 private sector banks, 44 foreign banks, 12 small finance banks, 6 payment banks, 43 regional rural banks, 2 local area banks, 33 state cooperative banks, 352 district central cooperative banks, and 1500 urban cooperative banks. So all these banks, 10 types of banks, as I said, number to 2025, but they have many branches. The scheduled commercial banks themselves, as per the Reserve Bank of India's data, by 2022 end have 1,54,000 branches. Then who pays the premium and how much? The banks pay the premium on behalf of the depositors. Depositors need not pay any premium to the Deposit Insurance and Credit Guarantee Corporation. What is the premium rate? When the Deposit Insurance Corporation was set up, the rate in 1961-62 was 0.05%, 5 paisa per 100 rupees. Then it was brought down to 0.04%. But again it was restored in July 1993 to 0.05%. Later it was enhanced to 0.08% in 2004-05, and the next year 2005-06 it was 0.10%, and later April 1, 2020 it is 0.12%. Then what is the amount covered? It is 5 lakh rupees now. That is from 4 February 2022. When the Deposits Insurance Corporation came into being in 1961-62, it was only 1,500 rupees. Then later it was enhanced in 1968 to 5,000 rupees, and again to 10,000 rupees in 1970, 20,000 rupees in 1976, 30,000 rupees in 1980, 1993 it was enhanced to 1 lakh rupees, and later after so many years it is 5 lakh rupees now. You know, when the DICGC gives this 5 lakh rupees, it is when the bank fails after its liquidation. A liquidator is appointed. After the liquidator assuming the office, the liquidator is supposed to send the claim to the DICGC within 3 months, and DICGC is expected to clear it as soon as possible, not beyond 2 months. That means at the maximum within 5 months we will get our deposits back up to 5 lakh rupees. Then recently the government of India has brought a change to the DICGC Act, where not only during the time of liquidation and failure of the bank, but when the Reserve Bank of India steps in sensing something something bad in the banks and declares a kind of moratorium or asks the banks not to accept the deposits or grant loans. In such situations, it is the Deposit Insurance Corporation that will come in and protect the insured deposits to the extent of 5 lakh rupees. And here the depositors need to go to the bank. In the previous case, they don't need to. It is the liquidator ensures that money comes to the depositor. But here in this case, the second situation, when the banking operations are stopped by the Reserve Bank of India's all-inclusive direction, AID, then one has to go to the bank and give the details. Then what is expected? Within 90 days, the amount to the extent of 5 lakh rupees is expected. Then with this, what kind of benefit as a whole? The finance minister said that 98.3% of the deposit accounts are covered, and in terms of the amount, it is 50.9% of the deposits. In banks, as of March 2023, we have 190.35 lakh crore deposits, and this big money, it equals 70.80% of the estimated gross domestic product. It is 273.03 lakh crore. Anyway, leaving aside these macro facts, we will come to the area where we are more interested in. Is it only 5 lakh rupees? No. The rule is 5 lakhs based on same right and same capacity. If individual A has 5 accounts in different branches of the same bank, different branches, or same branch, several accounts. All these accounts are clubbed together. It is an individual's name. The style of functioning is the same right and same capacity. 5 accounts and aggregate to 25 lakh rupees. The guaranteed sum is only 5 lakh rupees. Instead, if a person has an account in his or her name, one account, and another account together with the spouse, another sum, let's say another 5 lakh rupees, 5 lakh in individual's name, 5 lakh together in joint account, and another 5 lakh as a partner. And even if the partnership style also, in one partnership you are the first partner, the other is the second partner, in another partnership you are the second partner. So all these accounts are not clubbed together, they are considered as different accounts. Each account qualifies for 5 lakh rupees each. So if the money is split into different accounts, individual's name, joint account, or account in the partnership within the same bank. This I am talking about the same bank. If a person deposits, let's say some 5 lakh in State Bank of India, some 10 lakh in ICICI Bank, another some say 6 lakh in HDFC Bank, 15 lakh rupees is safe. 5 lakh in each bank, up to 5 lakh in each bank. So there is no restriction that one individual cannot have accounts in more than one bank under DICGC. So your money is safe if you spread the money in different banks. And that is not a small sum, because these deposits are mostly of persons belonging to the middle classes, lower middle classes, their hard-earned salary savings, or their pension payment, or some retirement benefit. And when banks are failing, it is disastrous for them. So the individuals can plan in such a way as to spread the money in different banks to safeguard their money when it is more than 5 lakh rupees. And the DICGC, to conclude, doesn't cover the government accounts, state government, central government, or foreign government. And it covers all the accounts like savings bank account, recurring deposit account, fixed deposit, or special term deposit, and it covers both interest and principal amount up to 5 lakh rupees. Same right and same capacity. I think that I have made the point very clear. If you still have any questions, please feel free to note in the comment section. Hope you have liked this video. Please subscribe to this channel if you haven't done it already. As you know, it is free, but it greatly encourages me to get to you more videos like this. Thank you.